So if you split it into, most of the volumes or trading is done either in gold or crude, probably a little more in silver and also in copper. Now, what are the factors which are now affecting these commodities? The fundamental factors that are affecting commodities, particularly in the case of crude, is very well known. There has been a great amount of demand globally, but supply is comparatively less. Though inventory is building up, the supply is still lower than the projected demand because of the economies recovering now. After the pandemic, most of the economies are recovering, and because of that, the consumption demand seems to be quite high. And also for other reasons, like particularly the OPEC has decided not to increase the production. Probably they are meeting this week, and we will come to know whether they are going to increase the production further, which can have some effect on crude oil. Otherwise, on fundamental reasons, crude oil continues to be quite bullish, and also technically also, if you look at it, it is quite bullish and probably on both on all time frames, whether it's monthly, weekly, or time probably even in intraday time frames. Gold is more or less going to be impacted by US Fed decision on monetary tapering. Since pandemic, most of the central banks, or almost all the central banks, are pumped in extra amount of liquidity. Great amount of liquidity has been pumped in, and interest rates have almost come into negative rates in most of the developed nations. And whenever interest rates come to such a low level, gold normally suffers. Okay. But whenever probably we see slightly an increase in the interest rate, the gold looks to be, at least it just steadies itself first of all. And the most bullish circumstances comes, at the time of the start of the interest rate cut, not at the end of the interest rate cut. So last time when we saw gold rallying right up to the 1950, 1975 levels came at almost, when the market sensed that there probably could be, rate cuts. But once, the liquidity has been pumped into the market, then we saw a little bit of, softness, and now a slightly deeper correction of more than 10% that has come from the top till now. Now, gold is also linked to the currencies, the currency performance. And whenever we see the crosses, particularly euro and other currencies gain, gold also gains. And whenever dollar gains, gold falls. So that is some sort of a relationship that establishes between currency and gold. Now, gold on a weekly time frame is definitely bearish. On a daily time frame, it is quite choppy, we can say, because most of the time what we have seen as far as gold is concerned, the trend is more evident in a weekly time frame rather than in a daily time frame. So we have to look at, for those who are looking towards whether we should invest in gold, of course the investment can come in a very staggered manner through an SIP scheme in ETF, that is okay. But somebody wants to look into gold as an investment in bulk quantity one time, then in that case they have to wait for the trend to pick up. Now, the trend pickup will come only if 1830, 1840 in gold is crossed in the dollar terms. 1830, 1835 levels has to be crossed in dollar terms before we can say that it has exactly bottomed out slightly below the 1700 levels. So right now it is trading at 1740, 1750. So the consolidation phase, that would say that maybe it's a 1617, 1680 to 1830, 1840. So one of that is to break before we see either a further up move, establishing itself an up move towards 1940, 1950 on the upside in gold, or a further fall towards the 1550 levels in case if the 1670, 1680 price support is broken. So we will look at the chart and also look at how exactly to trade gold. So we will first look at the weekly chart. So once we look at the gold, we will also look at crude, we will also look at silver and copper one by one. So the major fundamental factor which is affecting the gold is the monetary tapering and inflation, and also the economic recovery that is taking place in US and how it is going to shape the policies there. So the general feeling is dollar is likely to be a gainer. Okay, So when dollar is a gainer, then gold probably will suffer. At least no big rally in gold is not something which is immediately on the card. So we have to wait and see whether any break in this correlation take place. So we can say that probably we have to be very careful as far as gold investment is concerned. It may take more time before we can consolidate our view and come to a conclusion that gold can now really steam up on the upside. So we will look at the Indian price of gold in terms of the mini gold right now, and we are using the investing.com site for this. So this is the weekly chart, and we have drawn a 50-week moving average. Normally, anything above big bullishness comes when the market is above the 50-week moving average. So we have now seen the gold prices trading much below the 50-week moving average. Previously, if you see, in many periods that if gold breaks above the 50-week moving average, if from 2018 period or so, you can see a substantial rally in gold prices. Now it is down, so we need to wait for some clarity in gold. So when will we get the clarity? So as far as the rupee price is concerned, it has to break this particular level, which is the 47,500, 550 levels. It has to break decisively before we come to a conclusion that probably gold now the bullish move is going to start. So for which it has to break that 47,600 levels or so, which we have seen some time back. So that has to be broken for gold to go. Now, if you look at the international price, we will look at the international price also first. International price slightly been sometimes it's above the 50-week moving average, and also now it is trading much below the 50-week moving average. And there also, if you see very clearly that if it is generally above the 50-week moving average, then the trend has been extremely good, and it just gave some false hopes in this particular period. But once it started to break below this particular low, again, for the last couple of weeks and months, it has come down substantially. So now it has to break that 1810, 1815 level for us to give us some hope for gold to rally further. So right now, what we can say is that gold is definitely pitching itself slightly on the downside, and we are not very sure whether if further break is going to take place below this, which is the 1720, 1721 level, and then later on this particular level. So right now, gold looks to be definitely on the downside as far as the international prices are also concerned, and Indian prices are also concerned. Now, the easiest way to trade the levels is that if some levels are broken, if a support level is broken, that becomes a resistance. If a resistance level is broken, that becomes a support. So now, if you look at the this one, that is the price action. This price action, if you see in gold, this is around the 1760 mark. That is the low year is 1760, and yesterday, last week, and this week it just went up to close to 1765 or so, and it is trading slightly lower right now. So this is a place which we have to watch, that in case if gold is going to fall below the 1750 mark, which is the today's low, then we will have furthermore on the downside. So we will look at the daily chart as far as international gold price is concerned, and here we have some support. This support is getting broken. So very clearly that this low is being broken. So that means this is going to be a very important resistance. 1765 is going to be an important resistance. So it looks as if the gold is going in for a sell in the time, for the time being, with 1765 as a stop loss. Now we looked at the same thing as far as Indian gold price is concerned. Indian gold price now on a daily chart, it is below the 50-day moving average, which means clearly it is still on a downside move only. And we will look at the we'll convert this into 20-day chart also to see where it is now. So this is a 20-day price action, and right now it is trading below the 20-day moving average. So once it starts to move slightly above the 20-day moving average and then cuts below that particular low. See, today it has crossed about 20-day moving average, and it is also closing below the 20-day moving average, which means this is not a good sign. Now we can always look towards the movement. See here also in the price action, it goes about 20-day moving average, and then just one below that the topmost bar above the 20-day moving average, we can go for a short and keep that as a stop loss. We have seen this particular time frame. This is one evidence. This is another evidence. Okay. And this is another, here it has not broken below this, so we keep it here. So this particular, this one. So we just wait for one bar which is 1 or 2 bars above the 20 moving average, and then if it starts cutting below the low of that, then it is better to go for a sell. So here, this also, this particular day, now you go for a short and keep this particular high as a stop loss. So today it is a day like this. So if it starts to cut below, so tomorrow if it starts to cut below this, then this would have made a top. So you can look towards going short below today's low tomorrow. So for positional traders, please observe that today's low is a very important thing. If there is going to be a price breakdown below today's low, then in that case, for a positional trader, one should go short, keeping today's high as a stop loss. Today's high as a stop loss. So please note that. Now it is going to be, it is already in a corrective mode and corrective upside mode, and just waiting for it to fall again. Okay. So the same thing can be applied for a weekly or for any time frame here. And we are now looking at, this is a 20. So in the case of a shorter time frame, you will look at the 50 moving average. See now, in hourly chart, the 50 moving average is coming slightly at 46,060 levels or so. Chances that probably it can go a little bit lower, and tomorrow it can also come up a little higher. So we have to wait and see whether it is also able to break this particular 50-hour moving chart. So right now in an hourly chart, it looks to be in the upside because it is on the it is above the 50-hour moving chart. But it is still below the 20-day moving average in a daily chart. So today's low is going to be a very important low, and a break below that particular low should probably ensure that you will have to go for a short and keep today's high itself as a stop loss. So this is the simplest way to think about it, is wait in any case for if in the price action is below 20-day and 50-day moving average, wait for some pickup to happen up to 20-day moving average or slightly above 20-day moving average. Now once it starts to just cross above the 20-day moving average, then in that case allow a pivot high to be formed. When a pivot high is to be formed, means that the highest bar above the 20 moving average, the low of that highest bar has to be cut. Okay. If that be the case, then in that case you can go for a short. So when I mean to say that, this is the same case, right? In the daily chart, this is the 20-day. Okay. So so many times we have seen that, see here in this particular case, it came there were a lot of many bars which have traded above the 20 moving average, right? So here allow this to dip below the 20 moving average, then go above the high of this particular bar, could have gone above this, then keep this itself as a stop loss, keep this itself as a stop loss. So at any point of time you will have only 1 day's range as a stop loss maximum. That is what you should always aim for. Any stop loss in any asset market, don't keep it beyond 1 day range. And the 1 day range here, it was 47,700, 47,333, which is around the 400 rupees or so. So less than 1%. So that is what normally you should keep. So if you are trading an hourly time frame also, you should keep only 1 hour as a maximum, as a 1 hour range as a stop loss. So you should wait for the market to come slowly to a level before you pick it up, right, for any selling or buying. So here also, if it is traded much above the 20-day moving average, in that case you just wait for it to come drop below this. Okay. Now once it is dropped below this, then go above the high of this particular bar. It has happened. So here it has now made a pivot point below the here it has made a pivot point below the 20 moving average, so you can go for a short here. Okay. So now it has gone below the 20 moving average. Wait for one bar to go up to the 20-day moving average and go for a short. So here it was like this, so it didn't come below the low, but here it came. Now you are going to keep this I itself as a stop loss. So the stop loss got triggered. Then wait for this entry to come, then go for a buy above this. So here, now here you would have gone short and probably waiting for the market to come down. So this is the way normally you should trade. That is, wait for at least a 20-day moving average to be reclaimed before you go for a fresh position. Now in the weekly chart, if you look at it, very clear that it is it is on a 20 moving average right now, and it is much below the 20 moving average. So we will expect a lot of resistance to come even at this particular place. Okay, that is the 47,240 or 250 levels. So minimum that has to be crossed. Then 47,650 has to be crossed for the gold to establish a new uptrend. So this is as far as gold is concerned. Normally gold, even in intraday, you should not you should use 1 hour time frame, because 15 minutes and all will be very, very choppy as far as gold prices are concerned. So better you choose either 1 hour or 4 hours time frame, even to do an intraday this one as far as gold is concerned. We will just look at the we have looked at the 1 hour. We can look at the 4 hours chart, because internationally most of the commodities and currencies, they normally look at a 4 hour chart. And here if you look at it, no, this is 20 moving average. We will make it as so there can be some support close to this particular level, but we will look at the 50 chart, 50 bar chart. Now, as I told you, gold is a very choppy commodity, and it has to be traded more. If you look at this, even in the 4 hour chart, you just see the way the chart movement is there. Even in a 4 hour chart, when this is not good, okay, then better not to trade that particular thing. So you have to look at probably trading in a slightly higher time frame in order to ensure that you don't get stopped out too frequently. The alternate thing that as far as trading any asset commodity is concerned on a daily chart is to look at the pivot points. Okay. Now let us say this particular day, this is 46,515. I'll make a note of it. So 46,515, 46,125, 46,515. So I and close is the same. So I'll make a note of this. So high is 46,515. Okay, low is also 46,515. And sorry, this is close. Low is 46,125. So let us look at the R1, R2 levels for this. $46,385 is the PV. 46,385. Okay. Now let's look at R1 and S1. 46,385 minus 46. R is 46,645. Right. S1 minus 46. This is 46,255. So if one level is cut, then you can look towards going long. So yesterday's close has been good. So you have to keep S1 as a stop loss, 46,255 as a stop loss, or probably even keep 46,385 in case if 46,645 has been cut today. So let us look at what has happened today till now. Today just come to 46,645. See, just see R1. R1 is 46,645, and now the pivot point is 46,380. That's what we have mentioned here, right? 46,385. So absolutely, it has obeyed the R1 and average very clearly. So what you basically need to do is that you have to today, if it's going to go below 46,380, then in that case you have to keep 46,645 as a stop loss and trade it, and probably look towards taking profit at 46,255. That is one. Second thing is that you can go short right now, okay, or slightly on the higher side, and keep 46,645 as a stop loss, because that is R1. So that resistance, if it is crossed, then probably we may go to R2 levels or so. So right now, for intraday player, you can keep 46,645 as a stop loss and sell on any rally towards 46,500, 550 levels or so, keeping 46,645 as a stop loss, right? So this is how you do the intraday trading using the pivot point. So either you use the bar charts, the resistance support being cut, that one you can use, or you can use the PP, R1, R2, S1, S2 levels, okay. Now, of course, there are different pivot points. This is a classic pivot. We have a Fibonacci pivot and all. So I'm not getting into that particular aspect right now. So this is a very important. Now the classic pivot seems to be holding. So you can use these levels to go for a short or a long. So if one level is broken, you can go and do the next level. Okay. Now similarly, you can also use the Fibonacci also as far as gold is concerned. So let us look at this particular high to low, 45,488, 45,488, 46,645. This is 45,488, right? So now we will draw the Fibonacci for this. Not coming. Okay, we will manually calculate. It's not coming properly. There's some problem in this. So the low is 45,488. So low is 45,488 and high is 46,645. Right, today we have got this. So what is this difference? 46,645 minus 45,488. The difference is 1,157. Right? Into, we'll go into 0.235. That comes to 272. That's the first point. then 1157 into 0.386. That is 446. So we will first deduct from 46,645 minus 272. So that is the first support. That comes to 46,373. That is what we got right today, 46,380. So this is the first support. If it breaks this, then in that case you can definitely go short, keeping 46,645 as a stop loss. So today we have got a Fibonacci also in this. So the next level of support will be 46,645 minus 446. If you take 46,645 minus 446, that comes to 46,199. 46,199. So the next area of support that will that you may get is this. Okay. So once this breaks, you can look at next support coming here, then subsequent supports coming. So one level is broken, you can keep the other level as a stop loss for trading. So this way also in using Fibonacci you can trade. So we will attempt the same thing as far as crude oil is concerned. We look at the WTI crude. Sorry, Indian crude oil futures itself. Another big rally today from 5600 to 5814. So the rally continues there. So on a daily chart, this seems to be unstoppable. Okay. Now, just in the last 1 hour also, it has rallied very significantly, which is a very big negative as far as Indian economy is concerned. Okay. So now in this case, okay, now you want to let us say trade this. Okay. Let us say we will look at the daily chart. This is a daily chart. Very clearly, it is above the 50 moving average. Now, this is a huge rally today, right? So this is also a very big rally at some higher levels. Okay. So now we will look at the what probably the Fibonacci that you can get. So now already this is rallied from this place to this, and from this place to this place. So if there is a drop, we have to look at now this high, from this high to this low. So at least a 23.5% retracement. So even immediately it has to come is this particular low, which is the 54.35, and right now it's going at 58.24. So 58.24 is the high, and the low is 54.35. So if you want to trade long, where should you keep the stop loss? Now this is already 400 points, right? Let us say we are swimming 400 points into 0.235. So this will come something like 92 rupees or 94 rupees, right? So right now, even if it is going to fall from here, minus 94, okay, so this will come at 57.30. So right now you can, if you want any dip in crude oil, you can buy with a stop loss at 57.30. So already it has rallied from 54.35, and it has now rallied up to 58.24. Now this rally could further extend, but right now, for at least for the price action that has come till now from the low, the 23.5% retracement is 57.30. So what you can do is that you can go with this 57.30 as a stop loss, and then trade crude oil right now. Okay. So being such a huge rally, you can look at 57.30 as a stop loss, and then even buy on intraday or even for tomorrow. So even for tomorrow you can buy today, keeping 57.30 as a stop loss. So this is a very simple thing, rather than looking at probably the moving averages and charts, because the chances that if you look at the moving average and other things, you will get a lot of confusion. One is because it will not exactly stop at the moving average and come down, right? So it may go up a little higher, it may come down a little lower. So how exactly to trade will always be confusion. Only an experienced trader, though the moving average looks to be very simple, but only the experienced person will know how to use the moving average in a very proper manner, okay, so that he doesn't get whipsawed. In the case of a Fibonacci or the support resistance levels and the pivot trading, very less chances of you getting whipsawed, okay. I mean, like, no, up and down movement. I think it will be a little more clear for you, because there can be some up and down movements within a particular level, but then you can trade that a little more comfortably and easily. So this is one way of trading, and it's more comfortable way of trading using this. So the technical picture of the crude oil is that it looks to be quite strong, and you can even go long on intraday also, or for position trading also, keeping 57.30 as a stop loss. And let's look at the same thing as far as crude oil international price is concerned. Suddenly there has been a big rally there just now, so we will look at what is happening as international we will look at the crude futures. So it has picked up to 77.84, the 78 level. So this is also the chart. Of course, the chart is the same like the Indian rupee chart, and it is significantly now above the 50 moving average. And also any dip, now this is a higher highs and higher bottom. So in the classic Dow case also, this seems to be a very clear case for going long. And where do we put a stop loss? So in the case of rupee crude oil chart, it is 57.30, and here you can just measure the same thing from this bottom to whatever high that you have got. In that you can put in your stop losses, okay. And now we will look at the silver and copper. Copper futures. Copper futures. Copper futures also on the daily basis, it's now trying to edge itself again above the 50 moving average. So we have to wait and see of how whether there's a slightly a consolidation phase that is coming. So we have to wait and see whether some more choppiness is there as far as copper is concerned. Now we look at the how to trade right now. The copper is that you can since it is this is a bottom, this is an important bottom. From here, the same Fibonacci ratios that you can apply. You can just buy. You can take this 692 and whatever levels right now, it is 723. So it's almost 30 rupees. So 30 into 0.235 is around 6 to 7 rupees. So you can keep 716 or so as a stop loss. So 715, 716 you can keep as a stop loss and trade copper futures on the upside. So you can keep 7. Okay, so this is 718. So you can keep 716 or so as a stop loss for this entire move, which has taken place from 691 to 723, which is around 32 rupees. So 32 into 0.235. Right now you can keep around 750 this one. So 723 minus 8 if you keep, okay, it's around 715 level. So around 715 is a place where you can keep a stop loss now. So very clear right now. So any dip if you buy, you can buy closer to the 715, and and then you can come out of that if the next level of Fibonacci is broken, that you can keep as a stop loss. So 0.386 into 32 rupees is comes to 12 rupees or so. So your stop loss can be you can buy closer to 415. So this is copper futures. So 723 minus 13, so 710. So 715, 716 you can buy, and keeping 710 as a stop loss. 710 as a stop loss. So this way is also very you can easily comfortably trade using the Fibonacci. You don't need to look at even the moving averages and other worries as far as trading is concerned. You can just use the Fibonacci itself, and if one level is broken, you can go short below that level and keep the higher level as a stop loss. So this could be seen even before. Now to illustrate, for example, this was a daily chart. If you go to it, okay. So when it was trading here, probably you can from this low to this one you could have taken it, or probably then after that, if it started to climb from this, then probably you could have taken from this low to this high, or from this low to this high. So let us say you're taking it from this level, which is 704, and 746 is on 42 rupees. So 42 into 0.235, it will come closer to 10 rupees. So the moment it started to drop below 10, which is 735, 736 levels, then you can know probably you could have made an entry and you could have got out of it when the next Fibonacci level was broken. So that means this is 42 into 0.386, which is around 16 rupees. So 5-6 rupees you could have kept a stop loss and you could have come out of it. So this place 746 and 746 minus whatever I told you, 16, 730, you could have kept as a stop loss and come out of the position there itself. So probably you could have come out at much higher level here itself, rather than even a break below this particular level. So you can either keep this particular from this place to this place you can keep, or probably from this level to this level. So depending on whichever is comfortable for you as far as stop loss is concerned, you can keep it that way. Now if you look at the slightly bigger chart here, it would have been a weekly chart. So not getting it. So suppose if you keep it from this level, it is 673, and 673 to 746, it's around 72 rupees. So 72 into 0.235 is around 17, same thing. So 17 minus 746 is going to be 729. So if it starts to break 729, which was this particular low itself, we could have got out of that position. We could have got out of, or any long if you enter, then the next point of stop loss, which is 72 into 0.386, is around 28. So 28, 746 minus 28 is say 718. So this is 718. 718 you can see. Okay. So below 718, you would have got out of the position. So you would have entered at around say 728 or so, and if it starts to fall below 718, you could have got out of the position. So it depends from which level to which level you want to take, and the weekly high lows are very important levels where the Fibonacci will count much. But if you are looking at a daily chart also, it's okay, fine. So that also you can look towards trading it from one particular high to from one particular low. So this is how normally you use Fibonacci also for trading. You can use the pivot point also for trading. You can use moving average, but whichever thing you feel is simpler, whichever one you feel simpler, then use that. And if you are very comfortable in the Dow chart of higher highs and higher lows, and chart and other things, probably you can use that also. So depending on whichever is comfortable for you. But using the moving average, you will find that sometimes it goes up, sometimes it goes down. So how do you trade? So that sort of a confusion will always come to you. In order to avoid that confusion, you use the Fibonacci from some very important levels. So right now, if you look at it, the important levels that we speak could be from now. If you look at it, this particular level is important level for Fibonacci. Similarly, this level is an important level for Fibonacci. And then probably you can also look at, since it has now rallied above this particular high, this also is going to be a very important level to watch for. So the choosing of the levels for doing the Fibonacci is also quite important. And if at all you have one low and one high, you can use a 61.8% retracement from this place to this place as an important place for stop loss. Similarly, from this place to this place also you can use 61.8% as an important place for stop loss. So wherever you want to keep it, you can use 61.8 or 78.5% as a very important stop loss. Okay. Now let us say this place you used 704 and this is 746. So 42 into 0.618 from the top is around 26 rupees. So 26 minus 746 is around 720, right? So then 718, it came to 718. So generally, this 61.8% is also a very sacrosanct. From any particular level to this area, you can use it. So now, if you are going to use that same 61.8%, you can use from this place to this top. Okay. Now, anything which is below 61.8% will now reverse the trade. Okay. So you can keep it like that. Trading a little more even simpler. You can keep it. So from any important high to any important low, you can even keep a 61.8% as an important stop loss. And the important high and low, you can use it as maybe the 50-day moving average. That is, since this is below the 50-day moving average, and this one went above the high above the 50-day moving average, so you can keep this as an important low. Similarly, this is an important low. This is an important high. This also is an important high, and today it is now rallying above this. So probably you can keep either this or this as an important low. Okay, as a place where probably you can calculate the Fibonacci ratios just to find out which is an important pivot point from where you have to calculate your Fibonacci. For that, it will be quite helpful. Otherwise, normally you'll have most of the commodities on a daily chart will be quite choppy. Unlike some of the equity indexes where probably you have much greater clarity as far as the trend is concerned. Here the trend is a little bit confusing as far as the daily chart is concerned. So if you have a confusion on that, then better you go to the weekly chart. So in copper, probably even the weekly chart is not very clear. So then in that case you have to go to the monthly chart to see some sort of a clarity. And so the monthly chart also reveals that probably you are still on slightly on the bullish mode only, and there is a revival now that is taking place because from this low to this high, probably that 61.8% retracement worked. Now this is the if you look at from this low, it is 652 and this is 812, so it is 160 point. So from the bottom it should be 61. So around 60 points from here, just around the 710, 712 mark. See, 685. So it even came down much below that. So it has even broken that 61.8%, but probably came to 78.5. This is the next level of support there. So 652, 812, approximately 160 points there, and 160 into 0.235, that is 37. So 37 plus 652, so 689, 690 is one important level. It even on a month low, it even collapsed below that, but 685 seems to be normally holding. So 685, 686 seems to be a very decent support level which is holding right now. So I think it has come down to 78.5% retracement from the top. So right now probably if it is going to go up, so we have to look at the 38.6 from this high to this low. From this high to this low, you can calculate your Fibonacci, and those Fibonacci levels are going to be quite important. And if it breaks one above the other, then probably we are looking at the next level being achieved. So this is how you normally use your calculations. And so since monthly chart is only for bigger identification of it, we are looking at the daily chart, and based on this, either in the daily pivot basis or on the basis of Fibonacci or on the basis of whatever probable indicators that you may be already adapt, you can use it. The simpler ones are what I told you, pivot trading as well as the Fibonacci. Okay, so now it's 7:45, so you can ask your questions now. Thank you. So thanks for your participation. Hope to see you on Thursday with a weekly review of Nifty and Bank Nifty. Thank you very much.